evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Got my son sitting out there in the driveway, blaring his music. How y'all doing this evening, man? I just woke up. I was knocked out. Good evening, everybody. If this first, what's going on?
My bad.
Oh, you good, man. You good.
Didn't know you was having one today.
Me neither. Sure, look. Oh, when you be like sweating, like if you sweated a shirt, then later on it get dry, it still got that neck look. got that wet
neck.
shirt. Yeah. Got that loose neck, loose neck t-shirt way.
Come on. I think they had a commercial about that one time.
Yeah, the loose neck t-shirt. But yeah, man. What's happening, man? If you this first time tuning into Tim's Tidbits, we typically don't talk about loose neck t-shirts. We typically talk about price action. But if this is your first time tuning in, allow me to say welcome. If it's not your first time tuning in, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's what my loose neck t-shirt say. That should be Big Spider, Hablo Español. And you are tuned to another episode of the Intraday Price Action Recap, being brought to you by the Smart Money Manuscript. First link in the description below, you can purchase the Smart Money Manuscript for $69.99. If you missed the introduction video, it's a course that I've made. Teach you everything from the absolute beginning and basics, dealing with money and finances and stock markets, all the way through the highly advanced ICT concepts. I don't try to teach them. I just share my understanding of what they are. And through the Smart Money mentorship that comes with the Smart Money Manuscript is where we meet every second Saturday at 12 p.m., where I take your hard-hitting questions dealing with anything price action related. All right. First link in the description below. Speaking of links in the description below, if you think you're ready to try out prop firms, I trade mostly with Apex. Also trade with like Tradeify, but I got a link for Apex. I don't have a Tradeify link. Apex doing 90% off right now. $19.60 for any evaluation size. Make sure you use my link down there. That crazy Z, whatever. Yeah, I ain't got no fancy personal link. They reached out to me via email one time, say, hey, this is your personal affiliate. Nope. Get out my inbox. I don't want to work directly with nobody. Cause when you be working with people, man, people be trying to put rules on what you can say and what you can post and what you can do and all that. I ain't got no time for that, man. Got no time for that. Now, if I was, if I was on some huge channel and brand deals was coming to me and you know what I'm saying, I could leverage my channel to get $20,000 and $30,000 per post. That'd be different. But right now, y'all ain't coming to me with nothing but, hey, I can give you a code. I can give you some free accounts to give away. I can give, I ain't with none of that, man. I ain't with none of that. What's going on? I see we got Lump up in here. I see we got Here Learning Share up in here. We got Kim.
Thomas. I gotta go to work.
Okay.
Yeah. All right.
We got Marco up in here. Gigi. Oh man, Avery. I ain't seen that name in a month of Sundays, man. We got Thomas. Man, I ain't seen Thomas forever. Thomas, where you been, man? We got Tish up in here. What's going on, Tish? What's up, honey? We got I think that's Jada. With that J Trades. I think that's who that is. I might be wrong, but that's who it's gonna be. It's gonna be Jada. It's gonna be Jada. Let me see here. Got light skinned Deborah up in here. Sorry, I was looking for something, y'all. I got distracted for a minute. I was looking for something on the computer. And I just seen Tim Claus in the chat. Shout out Tim Claus, man. Tim Claus had came through in the back of class catching recordings. Okay, then that's what's up, man. I appreciate the support, man. I appreciate the support on the channel. Like I say, man, we're a small channel, man, but we, you know what I'm saying, we're a close-knit family around here. Right?
He said what you said. Wait a minute.
Uh-oh. We had light-skinned Deborah pop in for a minute. We said we had light-skinned Deborah pop in for a minute. All I heard was, what? It's been my winter break. Haven't been on the charts in a while. Man, you had a long winter break. I saw a post from Lorraine. Lorraine said something about no pre-market. What did Deborah do? What in the world was you talking about, Lorraine? What was you talking about? It said no pre-market. What did Deborah do? We had a whole what's the name this morning?
Sure did. A good session.
What's going on, Joker? Hey, man. I appreciate that, Joker. Shout out Joker Trades, man. I appreciate that, Joker. Same to you. Happy, healthy, and prosperous New Year. Oh, I was talking about Tim Claus. Tim Claus came through on Christmas Eve and blessed the gang with a giveaway. Not just the gang. Tim Claus came through. Not only did he bless the gang with a giveaway, he blessed all the viewers with an opportunity to participate in the giveaway too. You know what I'm saying? And it was a good thing, man. We had some people that was blessed. For those who don't know who Tim Claus is, let me share my screen real quick and show y'all who Tim Claus is. Go to screen share. Go to screen share. That handsome fella right there. That handsome fella over there, that's Tim Claus. You said that would be a pre-market analysis for YouTube. Oh no. I didn't know. When I be saying doing the when I say do the tape reading with everybody, I be mean everybody in the gang. Everybody in the gang. Not everybody on YouTube. Not everybody on YouTube. When I be like, we're gonna do it with everybody, it's everybody in the gang. So yeah. Because typically it's only like the diamond members and the mentees that do the tape reading. But I did it with everybody this morning. And I think it was a pretty good session, man. I think it was a pretty good session. What is? Yes, sir. What's that you sitting out there bringing down the property value of the neighborhood with all that bumpity, hippity, hoppity music out there in the driveway? Yeah, that hippity, bippity, boppity, hippity, rappity music. I was sitting there, all I hear, boom, 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 boom. Like, who in the world is this right here? Like, it gotta be my son. Bringing down the property value of the neighborhood, like out there bumping that ear jodem. Yeah, but Tim Claus came through on Christmas Eve and blessed the community. You know what I'm saying? Shout out to everybody who participated in the giveaway. Shout out to everybody that won in the giveaway. Special shout out to the people who paid it forward. Like I told y'all, it was no pressure on just accepting. No pressure. It's just, you know what I'm saying? Just in the spirit of giving, I allow people the opportunity to say, hey, I want to pay it forward. You know what I'm saying? It's more blessed to give than receive. Ain't nothing wrong with being honest. Ain't nothing wrong with being, I keep telling y'all, ain't nothing wrong with being honest, man. Nothing. Hey, Tim Claus look kind of familiar to me. Do he look like anybody y'all know? Do Tim Claus look like anybody y'all know?
A little bit like a Grande. That's Big Spider if you know our blessed how you say it.
They say Tim Claus look like Aranya Grande. That's just Big Spider if you don't hablo español. You feel me? Hey man, let's go ahead. Since I'm already sharing my screen, we're gonna share the charts. And I ask you all, did price do anything today that caught you off guard? Did price do anything that, you know, you was expecting price to do this, but it did that? You know, outside of the fact, you know what I'm saying, don't worry about if I watch gold. It don't matter if I watch gold or not. Don't worry about if everybody else talking about trading gold and trading silver. You know what I'm saying? You know, don't worry about that. You know what I'm saying? Y'all, hey,
Y'all know I'm gonna keep it a book with you. Look here. This right here is not a call out service. This right here is not, hey, let me copy what Tim, let me go full screen. This is not, let me copy what Tim doing while he talking. I'm a secretly trade in the background because he seemed like he know what he doing. This right here is a community of like-minded people trying to get better together, trying to learn together. You know what I'm saying? Trying to edify one another, right? So the things that we talk about, they work on anything that has price action, right? There's one algorithm. Now, let me rephrase that. There's one coding of the algorithm, right? There's not one algorithm that controls every asset, but there's one coding of the algorithm. So there's one algorithm. So if the algorithm is running gold, if the algorithm is running NASDAQ, if the algorithm is running Apple, if the algorithm is running it, and it is, because ain't nobody on a higher playing field sitting there pushing buy and sell. It's all ran by a computer, right? So since it's all ran by a computer, it's all coded the same way. So the things that we discuss are going to work because they are based off of time and price. The algorithm is doing very specific things at certain times, and that when time meet price, magic happens. Now, there, like I say, there is manual manipulation that can hold price in ranges. That's how we get these consolidations for like days and days and months on some assets. But we've already saw, or we've already seen, should I say, I got to use the correct tense, right? I used to get in trouble in English class all the time because I wouldn't use the past participle or whatever they call it. You know what I'm saying? When I was supposed to. Y'all know in the hood, people don't really be talking like they supposed to talk. You know what I'm saying? But anyway, so not a call out service. I'm not here to point and you shoot, right? And call out services, you have a person that point and then everybody else shoot, right? A person call it, everybody else just follow. That ain't what this is, right? We're grooming independent thinking traders and investors, right? I'm not grooming parrots. I'm not grooming Xerox machines, right? For those who don't know what Xerox machines is, it's just a copier. See, I'm old, right? Back in the day, you called things by whoever the biggest company that was making it, like a scale saw. I was like 40 some years old before I realized a skill saw was actually a circular saw. And the old heads just called it a skill saw because skill was like the biggest name that was making saws. And I don't even think my daddy actually owned a skill saw, but he had plenty of skill saws. A Xerox machine, that's just a copier. Xerox just was the biggest person making copiers back then, right? A Frigidaire, you know what I'm saying? Frigidaire was just the biggest refrigerator makers at the time. Hey, man, it is what it is, man. You know what I'm saying? Red Kool-Aid. That's that red Kool-Aid. What's red Kool-Aid? You know what I'm saying? Oh, anyway, let's get to it, man. Y'all feel me? Y'all understand what I'm saying? Y'all understand what I'm saying? We out here trying to learn. All right. Looking at price today, price didn't really do much today, but we still gonna look at it anyway, right? This is today's price action minus these two 15-minute candles right here on the end, right? Matter of fact, let me go ahead and knock them off, right? From right here, let me turn on my fancy dancy, right? From right here at the beginning of this gray rectangular shape right here, right? This is the start of today's price action, right there at 6 p.m. last night. And this right here is the end of today's price action right there at 5 p.m. today. Okay. We had some news today. The FOMC minutes, I think it came out at 2 o'clock. What time was the minutes? As y'all see, it either if it was 2 or 2:30, I can't remember the time, but it was nothing major, no big spikes or nothing like that, because it's not as volatile as the FOMC Fed rate announcement. The Fed's minutes is just the difference in the language from the last meeting to this meeting. It was at 2 p.m. right? It's just the difference in the language. So it's not really a super volatile thing unless he says something that, hey, Lorraine, don't be retracting statements. Say it with your chest. Say it with your chest. Don't be retracting statements. Yeah. So today, price was just consolidating, right? Oh, you had the time. Thank you, Lorraine. We're still in this range right here. I was looking at with the gang today. I was looking at the economic calendar, and I'm sorry, y'all. I be wearing socks in the house because it's always cold in my house. I got like a big sycamore tree in my front yard, and it shades the house in the evening. Like when the sun gets on the west side of the house, right? The house don't get as much sun because all my windows are on the back side. They on the east side of my house, right? So when the sun rotates around from like noon until the rest of the day, the sun ain't really coming through the windows anymore. And it's a big sycamore tree right in front of my house. Then my neighbor got like a whole bunch of big trees over there. So my house is just shaded for like the rest of the day. And so it's always really cold in here. You know what I'm saying? And it's crazy because it'd be like 72 degrees in here. Now, when it's 72 degrees outside, it's hot. It is burning up. But when it be 72 degrees in here, I be in here shivering. And I wear socks, right? And my socks, when I be, you know what I'm saying, sitting here at my desk, I don't know about y'all, but I can't stand, I'm sorry, y'all. I can't stand, you see this little gray piece on the sock right there, on the heel and on the toe? Those right there supposed to be in a spot for a reason. But I cannot stand when I'm on the carpet and it twists and it be like that. That is the nastiest feeling in the world to me. I can't stand it. And the carpet always makes it twist like this right here. So the little heel piece be like, and I got I'm telling you, I can't stand that. That right there, that's a close second to stepping in water with socks on. Squishy socks, oh my God. I cannot stand a squishy sock. Now, I digress. I digress. Squirrel, yeah, you're right.
that sock really aggravated.
hey, man, that thing, the carpet be making a thing twist, man. I be sitting there because it's like I be sitting down. I guess I be moving my feet around, and then all of a sudden it get tight around my ankle, and I look down, and that doggone sock be a twist right.
Man.
Hey, squirrel. Hey, man. But we just been in this range here, right? I was looking at economic calendar, say, hey, what's going on in the calendar? Let's see if we can figure out why it's in this range. But man, Phil just back. Looking at what we put on the charts as far as watching, right? You always want to have PD arrays on the chart that support and invalidate your thesis, right? Invalidate your thesis. Looking at what we have marked out on the chart, right? We talked about this during the chart prep. We talked about this during the tape reading stream, but based off of our 20, 40, 60-day look back, right? Whenever you're studying price, you want to do it from a top-down view or vantage point. You know what I'm saying? You want to get up on the top of the mountain and survey the land at 30 to 60,000 feet, right? You want to get up there and survey the land at 30 to 60,000 feet to understand what a going zone. You want to see what's going on in the valleys. You want to see what's going on over there in the hills. You want to see what's going on back there in the woods. You want to see what's going on all over the place, right? You want to survey the land. And based off of our 20, 40, 60-day look back, right, we had key PD arrays that we have been watching. Okay. Personally, I don't keep everything lit up on my charts, but we got the key PD arrays we've been watching is this order block right here, right? This fair value gap right here. It's a balanced price range, right? This suspension block right here, and this wick right here, this daily wick right here. These are the PD arrays that's been on our watch list, if you will, right? As price has been coming up here, right? This right here is last week, Monday, Tuesday, Wednesday, and Friday, right? This was the Christmas week right here, right? That's the Christmas week. Now, this right here is Monday and Tuesday this week. All right. We've just about erased the entire Christmas week. That short week that we had last week, we've just about erased that. Right? Between Friday and today. Well, Monday, Tuesday, and Wednesday, we've just about erased it with Friday, Monday, and Tuesday. Okay? Why are we watching these PD arrays here? Because when you're looking back through price, right? You want to look back through price as if you are IPTA, right? You want to look back through price as if you were IPTA. Now, IPTA looks back 20, 40, and 60 days, looking for liquidity and imbalances, right? Not only does it look for liquidity and imbalances, it's looking for true support and resistance. What is true support and resistance, Tim? PD arrays that it left behind to let itself know what it's supposed to do when it gets there. Different PD arrays mean different things, but all PD arrays mean the same thing. All PD arrays are the footprints that the algorithm leaves behind so that they know how to interact when it gets back to that point. All right. They're named different things, so that we can understand what is it going back to. Is it going back to an inefficiency? Is it going back to something that resides in order block theory? Right? Inefficiencies are a type of imbalance in the market. Things that reside in order block theory is just like what it said. It's a order block, right? It's a price point where the algorithm is going to make a decision based off the change in the state of delivery. It's an order block. Y'all hear me say all the time, the order block's job is to block price. All right. Because if it's trading down to reclaim an order block, that's what it's going to do. It's going to block the price from continuing lower or higher, if that's what it's time for it to do. Tim, how do you know what it's time for it to do? By studying what price is doing, understanding the true nature of a change in the state of delivery. Right? The order block gives you the change in the state of delivery. And if you're in line with the algorithm, if you understand exactly what the algorithm is trying to get to, and you're reading the order flow correctly, once it trades back to that change in the state of delivery, right, it's going to respond a certain way. Right? So, for those who don't know about IPTA and the look back, right? That's 20 trading days that I'm looking back right there. 20 trading days. Inside those 20 trading days, there, you're looking for the highest high and the lowest low that resides within those 20 trading days. And you do the set, wash, rinse, and repeat for 40 and 60. Right? And once you get that, right, you can grade it. You can grade it. Boom. Right? That's the highest high. That's the lowest low. Right? Well, Tim, why don't you have it connected right there? Because recently, when I've been talking with the gang, can y'all hear that blender? Is that blender loud to y'all?
Yeah. I don't hear it.
Yeah, I don't hear it either.
I don't hear it.
Okay. All right. So recently I've been talking to the gang and trying to give them advice on how to utilize the roadmap more effectively. Right. So that's why you see I have it anchored like this. Because whenever you grade something, right, that's your roadmap to where you're looking for trading opportunities. Right. And if this is your roadmap that you're looking for trading opportunities, you don't want to may possibly confuse yourself when you're on lower time frames and thinking that these candles right here, right, are the reason for the trade. Anything that's inside this dealing range or price leg here, where you have it anchored to, that's the supporting cast, right? You're looking forward for the trading opportunity, and you look back for the true support and resistance, right? And where are you looking for the support and resistance at? At these quadrant levels. The bulk of your trading opportunities, when you grade anything, is going to reside between the upper quadrant and the lower quadrant of that range. You don't believe me? Go back and do it. We've proved it time and time again in the gang, right? And the algorithm is so precise that when you grade a range, if you grade the gradients, the algorithm is doing the same thing inside there. And you'll see that price is forming very in between here. If you put the gradients there, in between there, the algorithm is doing something very specific at those gradient levels too. Right? That's the magic of the Fibonacci tool. Okay. And if you look 20 days back, right, that order block right there, right, got that order block right there. Then we have that suspension block right there that we talked about. We got that volume imbalance, that wick right there, right? See that wick right there? So you have a inefficiency right there. We got an inefficiency right there. We got something that falls into order block theory right there, all residing inside of our 20-day look back. Right? Well, Tim, why did you pick those out? Right. Let's see there. Right. So see here, we got this quadrant level there. See here, we got that quadrant level right there. Right. What's right about here? What's right about there? Well, let's see. Let's see there. I'll just do this. You know, so grade in between there. Right now, we're in a buy program. Right, we're in a buy program. We've come down to a discount. We talked about this before. Came down to a discount PD rate, and we start to rally up. Right now that we've rallied up here, all of these overlapping candles right there, we're looking at that down there as a balanced price range. We don't want to see price dropping down here. So when we look at our 20-day look back, this is equilibrium right there. If we don't want to see price coming back down there, that means we don't want to see price digging down into a discount of this area right there. So we're looking for things to support price from here up, right? And if we look through here, our suspension block right there, where's our suspension block? Right in the middle of that quadrant area right there. And if we look back, what do we have? We got that order block. If we keep looking back, we got that fair value gap. Right now, mind you, before any of these candles existed, right? Before any of these candles existed, remember, we was looking at that fair value gap and that order block before any of this existed. Right? Do you think it's an accident that when price started to come back up and it started to form PD arrays on this price leg up, do you think that is an accident that they are aligning with PD arrays that was important the whole time? Think that's an accident? Do you think that we got lucky about the PD arrays that we were watching before any of this happened? No, we're not that lucky. I'm not that lucky. Right? The few times I've ever gone to a casino or played the lottery, I didn't hit it big. Didn't win anything. Right? So I'm not that lucky. So, and this goes to show what I was talking about, if you can grade the gradients, right? It's not an accident that that suspension block falls right there on that quadrant level. It's not an accident. Right? What do we say about the quadrants? The bulk of your trading opportunities happen in between that upper and lower quadrant, right? Where's the bulk of the back and forth happening, right? All this back and forth with these wicks and these overlapping candles on the lower time frame, right? Those are opportunities, trading opportunities. You don't believe me? Let's just drop down to an intraday time frame. Right. This is a 15-minute time frame. Right. Does this look familiar to anybody? Isn't that today's price action? Right. That's today's price action. This right here, yesterday's price action. Right. Does it look like price came down to that quadrant, consolidated, hit that quadrant, went back up to that quadrant, came back to that quadrant, went back to that quadrant there, consolidated around it, right? Came back down. Does it look like price is paying attention to these quadrant levels? It's not an accident. It's not an accident. When he hasn't told me this personally, but Michael made a very direct statement. And I don't know if it was one of his videos or one of his Twitter rants, but when he said it, it stuck with me. Because I stick around and listen to him. So I just listen to him talk. I'm not just looking for, hey, what's the entry model, yada, yada. I listen to him talk. And he said, anytime he says, how do you think I'm calling it to the tick? How do you think I'm able to tell you where my PD arrays will form in the time of day they will form? This is how I do it. So anytime I hear him say, this is how I do it, I deep dive into whatever that was he was talking about. And when he was talking about grading PD arrays and looking for trading opportunities on these PD arrays, that stuck with me. That stuck with me. And throwback gang, y'all, if you've been here for a long time, you probably remember back, because when I used to grade my charts, right, I used to have quadrants on there, right? And then I would have a red box up here, like that. Okay. And then I would have a green box here, like that. And then I will have a red and green box inside there, like that, right? And y'all used to hear me talk about a discount of the discount, a premium of the discount, a discount of the premium, and a premium of the premium. Throwback gang. Who remember that? If you throwback gang, who remember when I used to mark my charts up like this right here? Have my little areas on there like that. Who been here long enough to remember that? Kim say she remember that. This right here is throwback gang here, right? Now, I'll admit, y'all already know when it's a bunch of colors on there, it be driving me crazy. That's why I moved away from marking it up like that. But it's still, the idea is still the same, right? The idea is still the same because when, let's take this dealing range right here, right? Because somebody spoke about this before. They was like, Tim, isn't, you're saying buying and selling, you're saying sell in the discount of an old PDA rate. You're saying buy in the premium of an old PDA rate. And I was like, I always say, yeah, I know it sounds counterproductive, but when you understand order flow and price delivery, right, you understand that once we leave this area right here, right, and we create this expansion leg there, right, what does Michael teach? You focus on your trading opportunities and the latest expansion leg of the overall dealing range. So once we leave this area, we're not looking for price to come all the way back down into a discount of the overall area because it's left a range that's been efficiently delivered and now deemed a balanced price range. So now we're looking at it from here, and this is our discount and this is our premium of the new portion that we should be looking for our trading opportunities. If we come all the way back down here, right, we've missed something that let us know that we are bearish instead of bullish, right? And then when we think about buying in a premium, right, just zooming in here to give you a good example. Right here, we're buying, right, in the premium of old PD arrays, right? That fair value gap come down. We're buying in the premium of that, right? Because we've left this range. So now all of this is a balanced price range, and you're buying in the premium of that, a beautiful buying opportunity, but you're buying in the premium of old PD arrays, not in the premium of your dealing range, right? Coming down and you're buying there, right? And if we look over here, right? See this bullish order block right there? We're buying in the premium of that bullish order block, right? We're buying in the premium of that bullish breaker right there because we're buying inside the wick, right? We're not digging all the way down to the discount of those PD arrays, right? You're touching it and going. Okay. And it's the same if you're looking at it for shorting opportunities. You're buying, you're selling it in the discount, touching and going, right? You're not trading back up to the premium. Your discount gone, right? That's what I mean by that. And when you can see, and it's clearly illustrated when you can visually see, right? Okay, yes, we're in a premium of the overall range, but the area that we're looking for our trading opportunities after leaving here, we've actually moved down into a discount. Like we're up here, we're moving back down into a discount. of our overall dealing range that we're looking at. And this is the portion we're looking for trading opportunities. So we went up into a premium, came back down into a discount of that overall range right there. Okay, makes sense? All right, if it don't make sense, hey, I'll do my best again next time. Let me see if I can undo that much. I turned off and stuff. That's good now. Okay, so 20-day look back, right? Got PD arrays that we're watching, right, to see if they offer support to price. All right. I typically get on, put boxes around my order blocks. I just kind of watch them. But my imbalances, right? I tend to mark out my imbalances, right? So that's the SIBI. We've been watching that SIBI for a long time. We was watching that SIBI as we came back up inside of here. We was like, hey, once we close above it, we want to see if it get used as an inversion fair value gap, right? Once we closed above it, right, we defended the lower half for a couple days, right? We closed above it here. Then 1, 2, 3, 4 days, we defended the lower half, and then we dropped down and closed below it. So once we close below it, watching to see, it should act as a reclaim. To push us down into the discount, into our discount PD array we was watching here on the weekly time frame. Then we got this discount sensitivity off that weekly PD array that we talked about. And then now we're coming back up that same one. It ain't going nowhere. All right. But Tim, why are you still watching it? Because the PD arrays don't go stale. It ain't going nowhere. Okay. When we look back to the left right there, right? We're looking back to the left. That SIBI right there, right? That's the first SIBI that was created when we dropped down here, right? There's one imbalance here, right? That fair value gap there, and then that's it, right? That's it. That's the only fair value gap outside of this suspension block. That's the only fair value gap coming in this direction. So why not still watch it? The PD rays don't go stale, right? It's right there in line, right? This was something we was watching that was in line with our quadrant levels, right? That PD array right there is intersecting that quadrant level right there. Don't go stale, right? That's been an item of note ever since this was our 20-day high and our 20-day low over here. That's been a thing of note for a long time, right? And as you see, the algorithm is still making decisions based off of it, right? Still making decisions based off of it. Tim, well, how do you say that? Right there. That is the middle of this PD array right here, right? Some of y'all still think I be making this stuff up, right? Some of y'all still think I be making this stuff up. If I come there to the high to there, right? That's the middle right there. Make them lines fatter just so y'all can really pay attention to what I'm saying. Make them real fat. Yeah, make them lines real fat. Move out of the way 20 days. We don't need you no more. Make them lines real fat inside there, right? Where is that order block, that suspension block, and that suspension block created? Now,
This is the PD array here. When you grade that PD array, right? When that candle right there closed, this PD array existed. So what does that mean? You're looking for trading opportunities from here forward, right? You're looking for trading opportunities from here forward, right? Where's the bulk of your trading opportunities going to come from on any algorithmic range that you grade? The upper quadrant to the lower quadrant. Right? When price came up into it, fell short of the lower quadrant, went back down, came up to the low, went back down, came up to the low, created a fair value gap in line with the low, right? Went up to consequent encroachment, traded back down into that fair value gap that was in line with the low, right? Changed the state delivery, creating a bullish order block, traded up to the high, closed above the upper quadrant, traded back down into that bullish order block that's in line with that quadrant, right? Traded up there, then got a volume imbalance right there. This long wick right there, traded back down into the wick of that old PD array. What are we doing there? Dropping now, right there, buying in the premium of that PD array right there, right? But we're coming down into a discount of this move going past that. From the change in state delivery, we're expanding up, coming back down into a discount of that range, but we're buying in the premium of that old PD array right there. Price goes up, makes a high, come back down off of the upper quadrant, off of the upper quadrant, off of the upper quadrant after sweeping liquidity, off of the lower quadrant after sweeping liquidity, right? Drop down off of the lower quadrant, right? Come back up, create a suspension block on the lower quadrant, right? Create a suspension block on the consequent encroachment, right? Trade back down, and now we're looking for support in these PD arrays that's down here in the discount, right? It's in the discount of that, and it's in the discount of the range that we're watching past the balanced price range. If you know where to anchor your Fibonacci tool, you can make magic. If you believe in magic, in the Fibonacci, but there ain't no algorithm, man. There ain't no algorithm, man. This stuff is all made up by some crazy old man that's just scamming everybody. Just scamming everybody. Hey, I see that we finally got down below that low there in the since 6 p.m. tonight. Right, this was Monday's low. We did not draw down into it today. When I was on there with Gang this morning, I was saying that since price had come so far back down, when we was talking about price, I was talking about how I really didn't want to see price come back down here for the sense of low resistance liquidity run moving higher. But since we came down here on Monday, I said that I would prefer to see this weekly low taken out, right, before we continue back up. And why is that? Right? Gang. I told y'all why I want to see it. But throw out the question out there for anybody. Why would taking out that low be considered healthy price action before going back up? If initially I said I don't want to see that touched because of the sense of low resistance liquidity run, right? Because we got a suspension block right here. If I want to see price move there for the sake of low resistance liquidity run, why am I saying taking out that low would be healthy price action before going back up? Who remember what I said? Or who got an idea? Just looking at the chart right now. Looking at this chart right now. Why is that? I'll give y'all a clue. I'll give y'all a clue. He's also, well, he was a member of the Migos. He was a member of the Migos. All right. It's got something to do with that. He was a member of the Migos. No, not Ant-Man.
Offset.
Not Offset.
Takeoff. Takeoff.
What they call Takeoff. Y'all know what they call Takeoff? For those who don't know, they call Takeoff the Rocket. That's what Takeoff the Rocket. They call him the Rocket. So what does the algorithm use as rocket fuel?
Liquidity.
Liquidity, right? And looking at our latest range right here, from there to there, where's the only liquidity resting in that range right there? Right there below that low. So if the algorithm is not going to give us a low resistance liquidity run, meaning it's not going to give a deep retracement back into a deeper imbalance or go sweep more liquidity, if it's going to give us the deeper retracement, we want to see that liquidity sweep. We want to see it take that liquidity. If it's going to trade now, it doesn't have to take it. It can trade down there and create bullish divergence with one of the sister indexes, namely the ES, right? It can very well trade down there. Let's go to a daily chart, right? This is the ES in the middle, right? This is the low we want to see it take, right? So it can very well come down here and create bullish divergence with the ES. This is the same relative low, right? It's not that this is the exact low here, right? But when we think about in relativity, right, this right here is the low for the ES. This is the closest one the ES is to, and this right here is the same low right there for the NQ, right? And the NQ has come down and taken this low, right? And so if the ES takes that low and the NQ don't take this low, right, it can very well go back up. Why is that? Because the same exact low for the ES is here, right? And so we can come very close to this right here and still have that bullish divergence between the two, because the NQ would be coming ever so close to that low there, and the ES is nowhere near it, right? Or we can still sweep this low, get the sweep that we want, and still have that bullish divergence, because if the ES come to this proximity low and don't make it to the same the relative low, right, we still got that bullish divergence between the two, right? Because we would be making, say, a lower low here, but a higher low over there. But we'll still be taking liquidity on both sides. The NQ will be sweeping that liquidity, the ES will be sweeping that liquidity, but we'll still have that bullish divergence based off of the same relative low, right? And then in this case here, we also have a PD right there, right? Got look like a suspension block there. If it's not a suspension block, there is a fair value gap. Then we got our suspension block there. So it's the same, right? Rather, you can do the same thing with PD arrays also. Relative PD arrays got our imbalances from the same day, right? If this one digs down into it and that one there barely touches it, that's still bullish divergence, right? Because it's happening on the lower end, right? We're watching that bullish divergence over there, right? But that there would be the healthy price action. Since the price is not giving us a low resistance liquidity run, you almost want to insist that it gives you that liquidity sweep. Give me that sweep of liquidity so that I know that you're fueling up the rocket and you're ready to take off. Woo, 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 woo. I killed me.
So when you set an alert down there to alert you that, hey, it just took that liquidity.
You can. If you want, if you that's a strategy that I used to employ when I was employed. I would set alerts on liquidity levels that I wanted to see taken. And I set alert to let me know when we take that. And then once we take it, right, I have something else that I'm watching and I'll set an alert. Okay, once price does this, alert me. And then I just keep setting alerts until it's time for me to, okay, now it's time for me to enter, right? Because I couldn't sit there and watch the charts all day, right? So I would just set alerts for key levels. When we take this, let me know. When we take this, let me know. When we do this, let me know, right? And y'all hold on for a second. Right. So, for example, these PD arrays that I'm watching right here, right? I would set an alert for whenever we traded into there. Like if I couldn't sit down and watch the charts, right? I would set alert for whenever we traded down into there. So we trade down into there, I get an alert at the opening price. Okay, we had the opening price or mean threshold or whatever whatever I wanted to alert me in relations to that PD array, right? And then let's just say if in this case here I'm looking for buying opportunities off of this right here. So I would set alert for alert me when we hit consequent encroachment of this suspension block, right? Set alert for right there. So when we come down there and we set alert, boom, now I'm coming back looking at the chart. Okay, we here now. What's available in price? Do I still want to try to find something to go long here? And if I look, say, okay, I prefer to look for something if price takes this right here. Alert me when we take that low, right? So if we take that low and I get an alert, right? Has it set up anything that I want to try to trade in off, or I just say alert me when it get here. Not only alert me, but alert me and buy, place a market order for whatever at this place right here. You know what I'm saying? Like you can use your alerts so you ain't got to sit there and wait. And alerts just let you know when you hitting key levels, be at a time where you want to buy, be at a time where you just want to watch to see what price has done, be at a time, you know what I'm saying? It's like you can set alerts to just let you know, oh, the ES took that low. Oh, but the NQ didn't. Let me pay attention to see if the NQ takes this low.
right? If the NQ don't never take and you go all day and don't get an alert, then you go back and look, be like, I never got the alert that NQ took that low. Now I see why, because the NQ done started going back up, right? The NQ ain't interested in taking that low, right? So then you can set alerts, be like, hey, what am I watching for next, right? That's the way I used to use alerts, right? Just for things I want to see, like all the stuff that I'm afforded the opportunity to be able to just open up my phone or come sit at my computer and look at now, right? Because now if it's not hitting the levels that I want during the time when I'm trading, I really don't care. The reason we will not yet be looking at this as a possible bearish divergence is taking the highs and NQ failing to do so. Is it because we are in a buy program? No, that's still bearish divergence. It's still bearish divergence, but you're right. When you're in a buy program, I don't care about bearish divergence when I'm in a buy program. When I'm in a buy program, I'm paying attention to the bullish divergence because I'm looking for things to support the bullish thesis until the bullish thesis is invalidated, right? As long as the bullish thesis isn't invalidated, I'm not going to spend a lot of energy on, oh, I see bearish divergence, right? Unless I'm trying to take trades against the grain. Then I'm going to be looking at, oh, I got bearish divergence. I see a good shorting opportunity coming up, right? So it's still bearish divergence, but since, right, I typically try to talk in the sense of what price is doing, right? Because not everybody has the understanding of the concepts to be able to think about it in both directions, right? And sometimes people start to get confused. So I try to talk about it in the sense of, okay, on the higher time frame, when a buy program, so we're looking at it from that buy program, right? All right. So price didn't do a whole lot today. That's why I was just kind of talking back through other stuff, trying to clarify things. Like I said today, when we started out at 9:30, I said price was looking heavy. All right. That's our 9:30 open right there. Right. I said price was, I like price look heavy. Right. Overnight, we haven't done anything, but price looks heavy. Right. And as you can see, since that 9:30, right, we dropped down, took out a low, we went up, took out a high, came back down, took out that low, then traded down into that daily low, right? So a whole bunch of back and forth, right? For a little wig snatcher here, boop, right? So we took the low, took the high, right? Almost took the low again, but then we eventually came back and took the low, went down. Now, for a wig snatcher, you want to see it be fast, but this is kind of like that delayed reaction where we got all of this time distortion right here, right? Remember when Michael talks about time distortion, when we just be consolidating, right? So right here, yes, we did poke up there and take out that high, right? But if you think about it, inside here is just a bunch of consolidation, right? A bunch of manipulation going on. So if you really look at it, we came down, we went up, we came down, right? With a bunch of time distortion in the middle. And then we delivered into that low, right? All because we had already talked about price looks heavy. We've just been consolidating, right?
We're not, this right here didn't spring us back up, right? So because we came down to our daily PD array and we started to rally back up, but we didn't take out that high and just came here and just start consolidating inside this daily wick, right? Price wasn't showing a willingness to take off. It was showing a heaviness. And then what do we end up getting? Manipulation of buy side one more time, still did not take out that high, right? That high, what does that high give us? Right there. Just looking at what price did right here, right? If we come back up there and take out that high, what does that give us right there?
Change in the state of delivery.
A type of change the state of delivery, but it'll be a what? Because remember, the change in the state of delivery is offering the opening
The
price of the
opening
order block,
price.
right? But this is a type of change in state of delivery. What's that? If we trade above that high right there, this high took out that low. So if we trade back above that high, what would that be?
Oh, breaking market structure.
Mm-hmm. Breaking market structure shift, however you want to phrase it, right? Because that high came down and took out that low. So if we trade back above that high, that's a bullish breaking market structure, right? We came to a daily discount PD array, rallied off of it, took out liquidity, but failed to get the breaking market structure, right? And then we just started meandering down, not showing the willingness to take that high. So that's why this morning I was like, price looks heavy, right? We talked about it, said this right here didn't take us back up, price looking heavy, right? We meandered around all day, a bunch of back and forth, bunch of overlapping candles. Remember on the tape read, I said the 15-minute ain't gave us nothing yet, the 5-minute ain't gave us nothing yet, but the 1-minute was performing beautifully. But these higher time frames still ain't said, hey, buy me, sell me. It ain't said nothing on them higher time frames. All right. I ain't said nothing on the higher time frames. Were there trading opportunities? Yes, there were. Right? Because look here, when we rallied up here and took out that high right there, right? We created a fair value gap. And then what do? We traded all the way back down into the order block. Once we came down into the order block, what do? We went all the way back up into the highest imbalance right there. Just so happened to trade to the high of today's new day opening gap right there, side the order block right there. I mean, that fair value gap right there, imbalance right there. And then we came back down, right? Took out that low, right? Traded down, set relative equal lows there, relative equal lows with the low, traded back up into that fair value gap, right? There's your shorting opportunity right there during the PM session. Then dropped down, took out the low, right? Price cleaned up over here, right around 2 o'clock or so. During the 2 o'clock hour, price cleaned up really nicely, trading really nice. And for those who don't understand what I mean by price cleaned up really nicely, look at the morning session here, right? 9:30 open, okay? Big overlapping candles right here, big overlapping candles there, huge imbalance taking out liquidity. But when we come back down into that imbalance there, we don't take off, right? Because we got an intermediate term low right here, right? But when we come back down into the imbalance, we don't take off. We come all the way down into the order block. But when we come all the way down into the order block, we don't go back up and take out the high, right? So we only go back up into the imbalance, right? And then once we do that, get over here with all this consolidation, right? All of this right here, Then when we displace away here and set these relative equal lows, taking out this low, right? We create an imbalance and we trade back up into that imbalance and we drop down and we create an imbalance. We trade back up into that imbalance, then we drop down, creating another imbalance and trading down into the liquidity. But notice, right? Price expanded, retraced, given an opportunity, expanded, retraced, given an opportunity. But this time when it expanded, we didn't get no retracement. We didn't get no opportunity. We went straight into the liquidity, right? Because the closer you get to the liquidity, the lower the probability of it retracing and allowing you to participate is going to become. That's why at certain points, when you hear Michael say, once we take out this low, I want to see speed below that low, right? And then if we look here, okay, where is that occurring? This is a discount PD array. These quadrant levels here, that's for a daily wick, right? Remember what I talked about, these PD arrays, right? Right. This right here is Monday's wick. That's this wick right here, right? That's Monday's wick right there, right? So when this wick was created, this candle didn't exist and this candle didn't exist, right? So I'm going to highlight everything that didn't exist when that wick was created, right? Everything that's inside of that wick. I'm highlighting everything that's inside that wick that didn't exist, right? I know y'all know, but it might be somebody that's on here who it really ain't sinking in for them yet. It might be somebody on here who it really ain't sinking in for them yet. And we don't want nobody to be left behind. Now let's go back down to that 15-second chart. 15-minute chart. And this is just everything that's inside of the wick, right? If I highlight the entire day, then it'll be up to that area right there. But we're just focusing on where the wick is, all right? So focusing on where the wick is, let me put in the upper line because I got the upper line head. Right. So remember we said the bulk of your trading opportunities are going to be found inside here, right? Those quadrant levels there, right? As we look through this quadrant level right there, right? What is the algorithm doing at these quadrant levels? All right. Let me just look through there. What is it doing? What is it creating on that quadrant level? Can y'all see the different BISIs, order blocks, SIBIs, order blocks, all wicks, all kind of stuff that's happening right there on the quadrant level? All kind of stuff that's happening right there on that quadrant level, right? It might just be me. It might just be me. And then when you get right here, guess what quadrant level that is right there? That's the lower quadrant, right? That's the lower quadrant right there. So see that swing low right there at that lower quadrant? When you hear me or Michael say, once we take out that low or take out that high, I want to see speed past that. I don't want to see no retracing no more. Because look at this right here. Let's dissect this. Where I say price cleaned up at. All right. So we come in here, right? Price came up, failed to take out that high right there, right? And then price displays down, right? Failed to take out that high. After we traded into that, price displays down, created a SIB, right? Now, this is the price leg that we're watching. Price leg dealing range. We took out some liquidity, right? So we're watching this dealing range right here, right? Notice when price displays down here, stop there, that candle there created a SIB right there, right? That candle created a SIB, right? Where's that SIB located? That SIB is located right there at the equilibrium point of this dealing range, right? Where else is that SIB located at? Right there at the upper quadrant of that discount wick, right? We trade back up into a slight premium of this range right here into that SIB, right? And then we displace down, right? Now, once we displace down, we haven't taken out the high. So when we extend our dealing range that we're watching, right? And we create that SIB right there, right? That SIB is created in conjunction with the lower quadrant of our overall range, right? It's also in conjunction with the equilibrium, but we have expanded, retraced, and then we're leaving all of this area right here. So now we don't want to see price digging back up into this balanced price range. So we come to where we left that area down to the low right there. Right. Hide this for a second. We came back up into a slight premium into that SIB that's connected to the equilibrium in the upper quadrant, traded up, and we traded into the discount right there of that bearish order block. So we're selling in the discount of an old PD array in the premium of our expansion leg right there. This is when we left that area, right? Trading to a premium right there. And then once we came here and boom, we traded down there. That right there is at the lower quadrant of our higher time frame PD array. Once we traded down and broke through there and we created that SIB that's in line with there. Once we took out this low, straight into the sell side. Speed right into the sell side. Didn't retrace back up, just straight down. Right. And then we got a deeper dig. And now it look like we may get a deeper dig. Right. But the further you go, the less opportunity you get for huge retracements when you're looking at low resistance liquidity runs. Right. When you're looking at those low resistance liquidity runs, you're not going to continue to get those huge retracements all the way back to the order blocks, right? But the algorithm is still doing what it's supposed to do, right? And then we got always remember that we don't never just abandon our ranges, right? Because we extend them, right? You always want to remember where you are in the overall range, right? Because right now, from that high down to that low, that's the overall range since we made this drop here. But that right there is the full dealing range right there. Right? That's the full dealing range that we're in right now for current price action. Right? Full dealing range from that high. Right? We came down, traded back up. We saw that we went back up into a premium, and then we dropped down. Right? That was another price leg. We dropped down. That was another price leg. We dropped down. That's another. So you got 1, 2, 3, 4 different price legs inside this dealing range right here. Can y'all hear my son back though?
Not really.
Oh, good. Cause that boy back there, I don't know who he playing with, but I don't know. That really ain't. I was trying to map them out, but that wasn't really. That ain't really doing what it's supposed to do. I was trying to map out the separate ones. And then being so rude to people. You about the worst friend in the world. But y'all get it. Right. So we got that one there, that one there, that one there, that one there. Right. All those different ranges make up this entire dealing range there. Right. And so now inside this dealing range right here, right, we got internal buy side liquidity there, internal buy side liquidity there, inside internal buy side liquidity there. Right. So if price, just say price did not take out that low right there, you're anticipating price to take out that low, we could come back all the way up and take out all of this liquidity right here, right? Trade back up into that imbalance and still go back down and take out that low, because this sell program right here is not invalidated until we trade back above that high right there. So that's why I say you always want to know your invalidation points for whatever buy program or sell program that you're in, and what time frame you're looking at. What price level is that, right? I mean, what time, not price level, but what time frame is that? Is the 1 minute time frame? Is it the 5 minute time frame? Is it the 15 minute? Is it a 60 minute? Now, inside that's this is a 15 minute dealing range right here, right? So this 15 minute dealing range here, right? We said that this sell program that prices in on this 15-minute time frame is not invalidated until we trade back above there, right? Now we go up to a 60-minute time frame, right? When we go back up to a 60-minute time frame, the 60-minute time frame sell program is not invalidated until we trade back above here. So if the 60-minute is in control on this 15-minute, trading back above there on the 15-minute, it might invalidate the bearishness on the 15-minute, but the 60-minute will still be involved in a sell program until it trades back above here. Right? And then if we look at a daily time frame, the daily is not even in a sell program. The daily is in a buy program. And the buy program on the daily is not invalidated until it trades below here. So this buy program that the daily is on, we're anticipating this to be taken. And we can take this, trade all the way down to here, repricing this whole imbalance, and still not invalidate. Matter of fact, the buy program ain't invalidated till you trade down below there. That's still internal liquidity, right? Inside of this bullish dealing range right here. That's the highest, lowest low. That's the highest high of this bullish dealing range. That's still internal liquidity. So you can come down there and sweep that and still not invalidate the buy program on the daily time frame. You always want to know your invalidation points of your buy and sell program, right? Because right now, that's your important low on the daily time frame. That's the low that invalidates your buy program on a daily time frame right now. And that's November 21st. The low from November 21st. Hopefully y'all found this helpful, man. I don't know. I just try to find different things to talk about, especially when price don't be doing a whole lot. I just try to talk about things that we've already covered and we may not think about, things that we talk about every day, and I still get like questions about it. So I'm like, okay, it's not hitting home for somebody, you know. Yeah, it's just, you know, sharing stuff the way I see it. Hopefully you find it helpful. I was talking to my mama today, my sister, my brother, and I think in 2026, gonna be the year that we spread our wings and fly away. I know some people clutching pearls right now. I know some people clutching their pearls right now.
Lord have mercy.
I know some people clutching their pearls right now.
You said we were doing price action in the morning too, right?
7 o'clock. 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 7 o'clo Friday. Friday. Is it Friday? When I got a doctor's appointment in the morning. When did I
Yeah,
say?
you got a doctor's appointment in the morning.
Yeah, Friday. We're doing price
No,
action.
you say
Friday.
that the students were doing the price action reading in the morning.
Yeah, yeah. In 2026. Yeah. That's what. Yeah, that's it. That's what I'm talking about. All right. So
That is correct. That's what I'm
yeah,
talking about.
yeah. We starting to spread our wings. Starting to spread our wings. So the the class participation is going to be stepped up because I want you to leave the nest, right? And if I don't push you to exercise the muscles, you just sit there and become reliant on me, right? So like Marco said, for like tape reading sessions, we're gonna have individuals that are volunteering to lead the tape reading session. And if ain't nobody volunteering, then people gonna start getting voluntold. You're gonna get voluntold, right? Because we got to start utilizing the muscles, right? We got to start utilizing the muscles because I know everybody learns at different paces, right? I know everybody learns at different paces, but when I sit back and think about everybody as a whole, right? I see too much doubt. I see too much self-doubt in you all. When you ask me something and then I'd be like, but you just said it. You already understand it. So that's why I say I see too much self-doubt, because the things that you either don't know you know it, or you're so unsure about what you know, you're seeking validation from me. And that's not conducive for growth, right? It's all about growing. It's all about growing. And the only reason why, and I say I know I can hear the pearls being clutched. The only reason why I've moved away from just kicking everybody out of the nest is because I understand that people have things going on in life where they can't dedicate as much time. People learn at different paces. So when I feel like you should be there, it's not fair for me to say, okay, you should be there and kick you out. But as your mentor, when I hear you ask me a question and I ask you to explain what you think it is or what you're saying, or what, and you tell me the same thing that I'm going to repeat back to you, I know you're just seeking validation. Either you don't know you know it, or you're just seeking validation, right? And you got to take the training wheels off. Daddy can't run down the street all day long holding the back of your seat, right? You got to take them training wheels off. I've been telling y'all for 2 years now, we sprinting now. So the class participation gonna be getting stepped up. It's gonna be getting stepped up, right? So get ready. Don't try to hide in the back and be quiet. Y'all know how I get when my feelings get hurt. Y'all know how I get when my feelings get hurt. Hey man, that's all I got. Anybody got anything for me? You can take your fingernails out of Sherman leg, not Deborah. When I said that, Sherman reached over there and grabbed Sherman with thigh. Was like, Sherman, did you hear that?
Let that man thigh go. Man got all kind of claw marks in his thigh right now. Done messed up his good dungarees. Hey, I don't see nothing in the chat. I don't hear nobody saying nothing. So we're gonna call it there. I got an appointment tomorrow. So no tape reading in the morning. I will do a tape reading Friday morning with the Diamond members because we didn't get an opportunity to do a tape reading last week because of holidays. And then so I did a tape reading this morning with the whole gang. And then Friday, I'm gonna do another tape reading with Diamond members, just as like a makeup, if you will. Ain't no such thing as makeup because everyday price action is different. So, but you know, I just be feeling bad when, we can't get together and do our thing. If there's nothing else, man, I'd like to thank y'all for coming and hanging out with your boy. Again, if this your first time tapping in, you probably ain't here now because we've been here for a really long time. But if it is your first time, thank you for joining us. Do the algorithm stuff, hit the like button and share it with people. If you're not subscribed to the channel, like the boy D Money say, let's go. Hit the subscribe button and turn your notifications on, man. Again, Apex having 90% off until January the 6th at 11:59 p.m. $19.60 for any size evaluation. 100,000 and lower, $65 for the PA fee up until January the 6th at 11:59. If you pass between now and January the 6th, it's $65. So you'll be $84.60 total cost in for 150 and below. I mean 100K and below. Then it's 125 for the larger accounts. I don't advise anybody to get in them larger accounts. It just make you have to work more. You know what I'm saying? Ideally 25K, just trade with strict risk management. You can do it. It's the easiest one to pass. 50K give you a lot more wiggle room. You just have to do a little bit more to get to the payouts, right? So, but either way it go, is doable. Take your time, be patient with it, and remember to use my code if you want to be part of the Smart Money Manuscript, Smart Money Mentorship. First link in the description below, right? I was thinking about doing a mentorship next year. I was thinking about doing a mentorship next year, but if I do a mentorship next year, I'm gonna put a price tag on it. It's gonna be a healthy price tag. I put it on there. If I do one for next year, it's gonna be a healthy price tag, and it's gonna be like limited slots. Hey, we took out that low. I just looked over there. We took out that weekly low right there. I just saw it. I just peeked over that charts. We tapped into that low. All right, man. Till the next time I decide to get on Algo's internet and share my thoughts in this thing that they call price action. It's your boy, Timothy Lee Rogers Sr., aka Rania Grande. That's just big spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.